Today, the new numbers and what they reveal about inflation and why it may matter for your mortgage. Here at home, a surprising shift in the Hampton Roads housing market. Sellers doing something they haven't done in years. And the one small change that could make a big difference in your monthly payment. Those stories and what they mean for your wallet. Next. Welcome back. I'm John Hopkins III, your Mortgage Rain Man. This is your weekly Mortgage Minute, where we cut through the headlines to show you what really happened, why it matters, and what it means for your wallet. This week, the big headline: rates didn't move much. But it wasn't because the economy was calm. Inflation stayed sticky, Treasury yields climbed, and yet your mortgage rate held steady. Let's dig in.
CPI came in steady at 2.7% headline, but core stayed sticky at 3.1%, driven by shelter, medical, and insurance. PPI was hotter than expected. Tariffs pushed input costs higher. Retail sales rose 1.5% month over month. The consumer still resilient. The 10-year Treasury yield climbed about 9 basis points to 4.33%. Meanwhile, the 2-year stayed anchored around 3.76%, well below the Fed's 5.25% rate, because investors are betting Powell will cut. That left the curve positive at plus 57 bips, and mortgage rates flat around 6.57%, insulated by spread compression.
Here's what that means. The 2-year is like Powell's mirror. It reflects what traders believe he'll do in the next 2 years. Everyone's piling in, betting on cuts. The 10-year is like the economy's diary. It reflects long-term growth and inflation. That's why it's sticky at 4.33%. And the spread between them? That tug of war is why your mortgage rate didn't jump. Here's your wallet math. On a $369,000 Hampton Roads home, FHA buyer with 3.5% down, at today's 6.57%, about $2,267 a month. If Powell goes dovish, maybe $2,227, save $40. If Powell's hawkish, closer to $2,369, cost $100 more. Best case, save $500 a year. Worst case, lose $1,200. Here's the kicker. That's already priced in before Powell even speaks. Dad joke aside, everybody's holding their breath waiting for Powell, which, by the way, is not a long-term housing strategy.
In Hampton Roads, you can feel the freeze. Buyers are pre-approved, but they're not acting. Days on market now creeping past 40. Sale to list prices at 99%, slipping from the highs. Inventory is up year over year, giving buyers more choice. PCS cuts are anecdotal, but with unemployment claims up 22%, demand is definitely softer. And sellers? They're bending. Concessions, credits, and repairs are back on the table.
So here's the truth. Waiting for Powell isn't the magic unlock. The cut is already baked in. If you wait, best case, you save $40 a month. Worst case, you pay $100 more and lose thousands in seller credits. Buyers, use this leverage. Negotiate hard. Sellers, price sharp. Offer credits to stand out. Refis, the big relief comes when we hit the fives. That's a 2026 story. This isn't a crisis. It's a course correction. And smart people win during corrections.
This week could shift markets quickly. Fed Minutes, July FOMC, released August 20th. They'll show how divided the Fed really is. Jackson Hole Symposium, August 21st to 23rd. Powell's keynote is the headline event. Retail earnings, Walmart, Target, and Home Depot report. Big signals on consumer demand. Existing home sales, August 21st. Will confirm if longer DOM is turning into slower closings. Best case, rates drift to 6.40%, saving $40 a month. Worst case, they pop to 7.0%, costing $100 plus. It all depends on Powell's tone and the consumer.
So what does all of this mean? CPI steady, PPI sticky, retail strong, 10-year up, 2-year anchored by cut bets, curve steepens. Mortgage rates flat thanks to spread compression. Hampton Roads, buyers frozen, sellers bending. This week, Powell at Jackson Hole, Fed minutes, retailer earnings, and existing home sales. Don't wait for a headline that's already priced in. And hey, if this helped you, hit like so more people see it. Subscribe so you never miss these breakdowns. And share it with someone on the fence, because waiting could cost them $1,200 a year. I'm John Hopkins, your mortgage rain man, turning market chaos into clarity. See you next week. Ready to make your move? Call the Hopkins Lending Team. We're not just lenders, we're your competitive advantage. I'm John Hopkins, your mortgage rain man, turning market chaos into clarity. See you next week.